Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, May 28th. A mixed trade here overnight. Feed grains are recovering a little bit from yesterday's sell-off, while the soy complex is mixed, mostly lower. Corn right now is about a penny better. Wheat prices up 2 to 4, let's call it, in Chicago and in Kansas City, while about 8 better in Minneapolis. Bean complex down 3 to 4 in the beans, down a buck and a half in the meal, while bean oil prices are up about 10 points. There were a few surprises in yesterday afternoon's crop progress and condition reports. Corn plantings advanced only 9% to 87% complete, barely staying above its 5-year average of 85%. The states with the most acres left to plant are Illinois at just under 2 million. Ohio at just under 1.5 million acres and 1.3 million in Indiana. The initial ratings showed that only 68% of the crop was rated good to excellent. That was towards the low end of expectations. Soybean plantings advanced 10% to 76% complete, slipping below its record pace of, I'm showing it at 77%, that from 4 years ago. Emergence at 50% versus an average of 40%. Only a few states are running behind their historical average, most notable being Ohio, where 52% of the crop is planted versus an average of 62%. Winter wheat ratings, they slipped another 2% to 50% good to excellent versus expectations for no change. Largest drops in ratings were in Oklahoma, Texas, and Nebraska, down 10 in Oklahoma, down 9 in Nebraska, 6 in Texas. To me, current ratings suggest an average yield of about 52.3 bushels an acre and production at 1.346 billion, that being below the USDA's average yield right now at 53.7. However, it would be above a year ago yields at 51.7. Spring wheat plantings advanced 5% to 87% complete, matching year ago and staying just above its 5-year average. Only 45% of the crop was rated good to excellent, well below expectations, helping explain the rebound in Minneapolis futures overnight. Otherwise, some light rains moving through the central and northern Midwest today, much heavier amounts in the southeast. Temperatures are expected to hold at below normal readings for at least a few more days across a vast majority of the nation's midsection before temperatures gradually rise to above normal readings in the early part of June. Extended forecasts lean towards an above normal temperature and above normal rainfall pattern through the first full week to 10 days of June. Also, some late beneficial rains in helping improve the second crop corn prospects in west central areas of Brazil. Inside trade for both July and Dees corn here overnight. Rebound efforts in Dees were capped right at its 50-day moving average at 449.5. Expectations of good export demand, I think, should keep good underlying support. Below the market, however, upside would appear limited given the mostly favorable weather outlook. I don't think we're going to have big issues getting the rest of the crop seeded this spring. Dees corn, I think, is going to hold within its April through May range, which runs about 435 to 470, pretty much up into the end of June with the June acreage data. Quiet trade in beans as we await announcements from on trade deals and biofuel RVOs support for July. Futures right at the 100-day moving average at 10.50 and 10.32.5 on the November contract. Inside trade for wheat here overnight, all three classes. President Trump just seems increasingly frustrated with the lack of progress with the peace talks with Russia and Ukraine. Despite all that's going on, wheat continues to flow out of that region. It just seems upside appears limited for now, with winter wheat harvest right around the corner. Thanks for listening, everyone. Hope you have a great day.